Hey, welcome. Come on in. I've got a spreadsheet here. It could be used as a template related to truck expenses. I initially set this up as if it were a hotshot business, but this template could also be used for over-the-road trucking. Now, right now, we're just going to focus on expenses. And in another video, we're going to go into the income. And then another video, we'll kind of put the two together. My name is John Thomas. I have a company in El Paso, Texas called ATEX Freight Broker Training. I do freight broker training, hotshot training, and dispatcher training. Many people come to El Paso for live training. Otherwise, we do training over Zoom. So let's get started here. I'm going to point out here that this template, you're going to see there are direct expenses, which are sometimes referred to as variable, and indirect expenses, referred to as fixed expenses. Direct expenses are those expenses that occur when your wheels are turning. If you're out on the road making money, you're going to have expenses. You're going to have fuel. If you use a broker, you're going to have to pay the broker. You've got maintenance. You've got a factor. If you use a factor, there's could be salaries, employee benefits, and other direct expenses like meals and lodging and tolls. And all of these are related when you're out on the road, when your wheels are turning. They're variable expenses, and they vary with the income that you're generating. Whereas the indirect expenses, the fixed expenses, these occur whether you're sitting at home or whether you're out on the road. For example, you could have a truck and trailer payment. There's insurance. If you have a bookkeeper and tax preparer, there's load board expense, and then office covers just about everything that it takes you in the office to run your business. So let's start up here with the direct expenses. I've got diesel fuel at $3.75 a gallon. I think this is pretty close to the national average. And let me mention here, before I get too deep in here, all of these figures, most of them, are hypothetical. Do not look at this as if this is what you should be doing or could be doing. These are hypothetical. Some of these expenses could be way off base. And that's why when you start running your business, you're going to collect information. You're going to record all your information. You have to do it for taxes, I may have mentioned. And you also want to do it for learning how to be more effective in your business. So again, keep that in mind. These are hypothetical figures. Do not rely upon them. They could be way off base. Some of them could be realistic. Like, for example, the fuel per gallon, that's pretty close. And so let's go ahead here. The 11,250 is the rate per gallon times the number of gallons that you run for the entire year, or for the entire miles, for the number of miles that you're running, both loaded and unloaded. Then if you use a broker, you can figure on paying them 12%. If you don't use a broker, you're going to have to use someone to get your loads. There's a lot more to be said about that. So the broker expense could be an expensive item. Here we're looking at over $30,000 for the year. These are annual expenses here. And let's just assume you've got about $24,000 in truck and trailer maintenance. Again, you're going to record that information yourself to learn exactly what it really is in your situation. If you use a factor, you may use a factor for all of your loads, or you could use them for some of your loads. And you can figure on paying them 2.9% for each load. So your factor expense could run over $7,000. Now, let's look at salary and employee benefits. These two items right here, they could very well be fixed expenses down here at the bottom. Driver expense, that could be the owner. He's out there. He wants to make 65 grand plus pay himself benefits. And trust me, you really want to boost this salary up. $100,000, of course, would not be out of the question. And this is in addition to the profit that we're going to look at further below. But you could even have salary and employee benefits, part of it variable and part of it fixed. It really depends. This might be something you would talk to your accountant about. And right here, I've got both of them in variable expenses. If you're paying a driver by the mile, of course, that would be definitely a variable expense, because if you're not moving, you're not paying him. If you are moving, then you're paying by the mile. It could be a flat salary. It could be some type of a commission. You have to decide how you want to do that. A lot of hotshot drivers starting out, they've got their personal expenses taken care of for a while. And so they don't even pay themselves a salary for a while. This is what they plan for. So it really depends on your situation. And then out on the road, you could be doing meals and lodging. You're going to have tolls and then other related expenses. As we'll see, I believe these meals and lodging might be pretty low. Again, I'm just guessing that, and I'm just throwing these figures in here just to make this work. So here we've got all the direct expenses coming up to $171,000 plus a little bit more, 68% of your income. And we're going to talk about the income in another video. But these are your direct variable expenses. And they'll go up and down depending on how many miles you're running. Now let's look at the indirect expenses, the fixed expenses. My first hotshot client had a truck and trailer already paid for. He paid, I think, about $100,000 for the pickup truck. Really nice outfit, nice Dodge Ram. And but if you are not so fortunate, you're going to have to buy a truck and a trailer. And again, this is just a guesstimate here. Insurance, this might be pretty realistic. You're looking at $20,000 a year. This is property damage and bodily injury and property damage and cargo insurance. I recommend if you don't know how to do your bookkeeping, you hire someone, get a good tax person. You could be looking at $4,500 a year or more for these people. Load boards, this could be one or two load boards, $3,600 a year, and in office and other expenses, $18,000. You'd be surprised at how the dollars increase in the office. This could include, maintaining a copy machine and faxing and computers and hookups and all that stuff, So for the indirect expenses, you're looking at $63,100, and they're usually going to run less than your variable expenses. So when you add your direct expenses, your indirect expenses, you've got total expenses of $234,000 and a little bit more. 93% of your income here in this scenario is going to expenses, leaving you a net profit of nearly $19,000 and a 7% profit margin. That seems kind of low to me, because even you're paying your broker 12% above. But again, this is hypothetical. So this is a pretty good template here. And of course, it's not the only way to do it. Not too many accountants will break down the income statement between direct expenses and indirect expenses. But then again, I could be wrong. I don't know. Let me mention that down here below for your profit. If you're running with new equipment, you still want to put some money aside as a cushion for repairs and maintenance. I would say maybe if you've got new equipment, truck and trailer, put away 3%, 5% of your income. Do that every week or every month. Now, if you've got used equipment, you might be wanting to put away 5 to 7%. It's important for you to build a cushion, and those repairs are going to come up. Sometimes when you don't really need them to pop up, they're going to occur. So get in the habit of paying yourself first. I'm going to add some information here. If it were me, if I was running a business like this, I would take a portion of this profit and put it into Bitcoin and keep it in your company and just kind of forget about it. It's going to grow a lot faster than your business. Bitcoin is growing about 60% a year. Consistently, over 5 years, it's been doing that. Now, why do you need all this information? Let's take a look at the other spreadsheet here for the key productivity indicators, KPIs. And these are just examples of how you can take information from your expenses and from your income, and you can come up with different statistics. These should be key indicators that help you make decisions on how to run the business. Your key indicators should be something you understand and something that you can take action on. For example, miles per gallon. You could be running just one truck, but you want to know what the miles per gallon is on your fuel expense. You could be running 15 or 20 trucks. You want to record miles per gallon for each truck and then come up with an average. There's a lot to running a big trucking business, and I often wonder how many truck owners actually go to the trouble to drill down and record this information and then use it to prepare their key productivity indicators. We'll just take a look at a couple of these here. Driver income per loaded miles. As we mentioned before, the salary was $65,000. Here's the number of loaded miles, and the driver right here is generating 58 cents per loaded mile. Now, that may or may not be realistic. I don't know. The income per loaded mile. Here's the income that we're going to look at the next video. And here are the number of loaded miles, and you divide one into the other, and your income per loaded mile is $2.25. I think that's pretty realistic, but some drivers are not making that much money per mile. It's tough. It's really tough. In my opinion, you need to make at least $2 a mile and as much more as you can over $2 a mile. Your fuel cost per total miles. Remember, you've got loaded miles and you've got miles that are not loaded. But you want to know what your fuel cost is for the entire number of miles. In this case, 7 cents per mile. That seems low to me. That seems very low. But again, we're just playing around with some figures here. Your truck and trailer maintenance per total miles. 21 cents for each mile that you're driving, both loaded and unloaded. And so you can take a look at this, pause the video and take a look at this. And these are just examples. I just made them up. You need to come up with your own KPIs and again, create those that make sense to you and those that where you can take action on them if you need to. So let's go back here and do a recap. My name is John Thomas. I have a company in El Paso, Texas called ATEX Freight Broker Training, Inc. I've been training freight brokers for over 20 years here in El Paso. Many of them come live to El Paso for live training, and others train over Zoom. I'm also doing Hotshot training and dispatcher training as well. And in fact, next week, I'll be headed out to the Permian Basin, and I'll be doing a financial and operations audit on a trucking company. It's not a real small company, and it's not real big, but that should be interesting. So listen, schedule a Zoom meeting with me if you cannot travel. You can reach me by email here, info@atexfreightbrokertraining.com. And my phone number is 888-526-2839. All right, that's all I have for now. Thanks for watching. And again, I'll be preparing the next video. We'll look at the revenues. And then I'll do another video and we'll look at both revenues and expenses. Again, thanks and take care. I appreciate your attention here.